Hey, what's going on, guys? So yesterday's video, we were looking for a ending diagonal pattern or falling wedge pattern to unfold in the wave 5, in the last wave 5, for the market to potentially find a bottom, right? And we were still looking for one more leg lower. But given the fact that when we looked at the structure at the first 30 minutes of the session this morning, we noted that perhaps this needed a little bit more of a push higher, right, in the wave 4. Because if you guys are familiar with Elliott wave, and the ending diagonal is made up of 5 waves, but each 5 wave has a subdivision of 3-wave substructure. All right, so the wave 1 has 3 waves, wave 2 3 waves, wave 3 3 waves, and so on to the wave 5. All right, so this morning when we around 10 a.m., as you guys can see here, we told the team that this was potentially going to be the pattern. Let me just blow this up a little bit for you guys. So this was the wave 3 low on May the 20th, right, to the 23rd on the A wave. So we probably could have done this, right, A, B, and C, but it would have been truncated or too forced. It was just out of proportion. So what we ended up doing was calling for this decline today to be the B wave. All right, so we told you guys that the 618 could be, or this range between the 50 and the 618 was going to be our range of support. And sure enough, that's what we got today. So the markets actually ended up bouncing at the 618. The 387.06 was the low of today before we started rallying up towards the C wave, which was what we're looking for in this pattern if it's going to play out like this. So what are our sort of hard line stops and our invalidations for this structure, for this pattern? So wave 4 will be equal to wave 2, right? That's one of the guidelines. Wave 2 and 4 will be equal. So equality of wave 4 to the wave 2 comes in at 402.15, which is 100% extension of wave 2 compared to wave 4. All right, 402.15. If we go above 402.15, then this count and this pattern is invalidated, and therefore we may see continuation to the upside, but not saying that that's going to be the bottom, because if I don't want that to happen, I actually prefer for us to stay below this level and then reject it and head lower, because I'll show you guys, I reworked the other count and the other count is not looking too pretty. It's a little bit more bearish, and I'll show you guys in just a second. So let's just take one more minute here before we dive into the other wave structure. So yes, the pattern is still alive and well. We're still going to see a contract or an ending diagonal falling wedge if and when we stay below 448 or 402.15. Once we see that happen, right, because this will be 3 waves, right, ABC, we're going to see another 3 waves lower into the wave 5 of wave C, at which point we may find support, and then we can rally. Not until then, not until we stay, confirm it by tomorrow, if 402 and 400 could be our 2 levels of resistance in this pattern. Otherwise, guys, what I worked over today was this. So I'm gonna shut this off real quick and show you guys real quick. So if you guys remember my previous wave structures, right, we're looking at this as a 1-2, right, 1-2 rather, or 1-2 and 1-2. But the truth of the matter is that you can't end an impulsive or emotive wave in 3 waves, right? You gotta have 5 waves, or a trend does not end in 5 waves, rather in 3 waves. This still looks like a correction, and we're looking at this as the wave 2, 1-2, right? If you guys remember. So let me backtrack here real quick. So this was the wave 1, this was the wave 2, this was a smaller 1-2, right? And then this was going to be another 1-2, but it ended up overlapping and then just becoming another corrective move. So for that reason, I had to rework the count. So what I came up with, guys, is this. We're still looking for a price action to head deeper into correction, right? Our wave structure looks like the following. So from our January high, right? Sorry, from our March high here on the B wave, we're looking for 5 waves down into the wave 1, and now we're looking for an expanded flat in the wave 2. On the expanded flat will be 3 waves in A, 3 waves down in B, and 5 waves up into the wave C. All right, now upside resistance, let me just shut this off because this doesn't count anymore for this, that's for the other count. So first of all, let's take an extension, right, from the wave 2, from the high wave 1 to down to the wave 2, and we'll see that a 38.2 and the 23.6% retracement are our upside targets for a wave 2 pullback. Furthermore, we want to see an extension of wave A and wave B, and we would like to see probably a 100, a 786. So let's see where that will land. So an extent, actually a 161 will also work, 100. So for now, we're going to operate that this, we're going to assume that this zone, right, the 23.6 and the 100% extension of wave A and B to give us wave C is going to be our next upside target, our next resistance zone. So that zone, guys, if you guys just bear with me here for a second, I know I'm all over the place. It's 402 and actually it's 402, range between 402.39 and 402.50. We'll call it that, right? Or in fact, we're just gonna say, to be on the safe side, this area. All right, the blue box is going to be where we will potentially see price action get towards and then reject and head on lower. Okay, so keep that in mind. If we start breaking north on our bullish count, right, because I'm considering this as the bullish, even though we're going to see one more leg lower. If we start breaking north of 402, which is the quality of wave 2, all right, and 4, then this is going to be, as you guys can see here, it's a bit of an overlap there, right? So 402 is the hard line. I'm sorry, I keep on going back and forth. So 402, anything above 402, that's story for this guy. So we'll focus on this one instead. Okay, so that's the SPY. So I know bad news. We're gonna see more downside in this market, unfortunately. Over to the triple Qs. Let's see, the triple Qs, same deal, right? We're still looking for the ending diagonal pattern here, or a falling wedge. All right, so 1, 2, 3, 4, right? It's the third wave here. 1, 2, 3, 4, and then final fifth of wave 2. Equality of wave 2 and 4 come in at 301.08. If we break north of 301.08, then we have no choice, guys, but to start looking for this wave structure. So this wave structure, again, calls for the same deal. Wave 1, A, B, C, and then the expanded flat to the wave 2. Okay. So this range between the 315 and 303, which represents a 23 and 38.2% extension or retracement rather from the high of wave 1 to the low of wave 1, will be our resistance zone. We're going to call it that. We're going to call that a resistance zone. So if price action heads higher from our bullish count into this box, this is where we're going to start looking for another short opportunity, right? Because right now I'm holding a short put spread on the SPY, all right? So I will look to open for another one here, and it's going to take us lower and increase the probability of profit for this move. All right, guys, so that's pretty much it for me today. Don't forget that tomorrow is Fed meetings, the meeting minutes rather, the FOMC meeting minutes. May not do much. We may get this rally north of this or just a rejection. Who knows? We'll see what happens tomorrow. If you guys want everyday Elliott wave analysis, hop on over to Trending Waves. The link to the Discord group will be pinned down in the comment section. So as always, thank you so much for tuning in. Give this video a thumbs up. See you guys. See you guys later. Peace, guys. Peace.